Hello everyone, my name is Bala and today I am going to present on the topic reverse charge mechanism under GST. So the flow of the presentation would be as follows. What is GST? Then introduction to reverse charge mechanism, then difference between forward and reverse charge, then when does reverse charge mechanism apply, critical rules and compliances, and at the end time of supply. So starting off with what is GST? So the goods and service tax is a comprehensive multi-stage destination-based indirect tax implemented in India on 1st July 2017 by the BJP government. This was introduced to replace various taxes like value-added tax, excise duty, and service tax. It was applied on the supply of goods and services at each step of the value chain, aiming to create a unified national market. Let's see the key aspects of GST. Uniform tax structure. It replaces nearly 17 indirect taxes to simplify compliance and eliminate the cascading effect. So, with the introduction of GST, basically 17 indirect taxes were removed, which was helping in the cascading effect. Then there were types of GST. It includes CGST, SGST, IGST, for interstate transaction, and then UTGST. It is a destination based tax, meaning the revenue goes to the state where goods are consumed rather than where they were produced. Moving on, let's start with the introduction of reverse charge mechanism. Generally, the supplier of goods or service is liable to pay GST. However, in specified cases like imports and other notified supplies, the liability may cast on the recipient under the reverse charge mechanism. Reverse charge means the liability to pay the tax is on the recipient of supply or services instead of the supplier of goods or services in respect to notified categories of supply. So basically, reverse charge mechanism means here the recipient is paying the GST and not the supplier. This happens in cases where the supplier is not registered in GST Council or very small is a very small businessman. So moving on, differences between forward and reverse charge. So in forward charge, the tax liability is on the supplier of goods and services, and in reverse charge, it is on the recipient of goods and services. Collection of tax. Supplier collects GST from the buyer. Supplier does not collect the GST. Payment to government. So in forward charge, supplier deposits the tax, and in reverse charge, recipient deposits the tax. Invoice type, standard tax invoice for forward charge and self invoicing for the reverse charge. Payment method for forward charge is they can either do by cash or by ITC, which is also called input tax credit. And in reverse charge mechanism, it is only paid in cash. Applicability: general rule for most supplies for forward charge and only for notified goods and services in reverse charge mechanism. Moving, when does reverse charge mechanism apply? There are two main scenarios under the GST Act where reverse charge mechanism is applied. First, the nature of supply. Specific goods and services notified by the CBIC, for example, in goods transport agency, legal services by advocates, or import of services. Second, supply from an unregistered person. This applies when the registered dealer buys specific goods or services from an unregistered dealer. Moving on to the critical rules and compliances. Registration. A person who is required to pay tax under reverse charge has compulsory registered under the GST as the threshold limit of 20 lakhs. 10 lakhs for special category states like except Jammu and Kashmir is not applicable on them. Input tax credit. Supplier cannot take ITC of GST paid on goods or services used to make supplies on which recipient is liable to pay tax. Payment method. Tax under RCA must be paid in cash fully. One cannot use existing ITC to pay off an RCM liability. Time of supply. The time of supply is the point when the supply is liable to GST. One of the factors relevant to determine the time of supply is the person who is liable to pay tax. In reverse charge, a recipient is liable to pay tax. Thus, time of supply for supplies under reverse charge is different from the supplies which are under forward charge. Required documentation, self-invoicing. Since the supplier is often unregistered or not charging tax, the recipient must issue an invoice to themselves. Payment voucher must be issued at the time of making payment to the supplier. Thank you.